Good morning from Westpac and welcome to another Finance AM podcast. I'm Ray Spicer, Westpac Market Strategist. In the financial markets overnight, we saw US equities rebounding. That came after a 3-day decline, and that's seen the S&P 500 today up 1.4%. There were no major news catalysts to drive the move. I would suggest just a bit of selling fatigue. Bond yields, they also changed direction and fell slightly, while the Aussie and the Kiwi stabilised after recent falls. In the currency markets, the US dollar index is unchanged on the day. Mixed performance among the currencies. The Canadian dollar underperformed after some less hawkish comments from their governor. And the Aussie dollar, it round-tripped from 77.35 down to 76.88, but then bounced back to where it started from. The best performer slightly was the Kiwi dollar, which initially fell from 71.80 to 71.35, but then rose back to 71.94, which meant that the Aussie Kiwi cross fell overall from 107.85 to 107.50. In the interest rate markets, the US 2-year Treasury yield fell 1 basis point to 0.16%, and the 10-year yield fell 5 basis points to 1.65%. Australian government bond yields overnight, not too much in a downward direction. The 3-year yield up a basis point to 0.27%, while the 10-year yield ranged sideways between 1.74 and 1.78%. Commodities had a less stellar performance overnight. Brent crude oil down 3.4%, copper down 0.9%, gold up 0.6%. Iron ore down a whopping 6.9%. Now that was from a record high, and it does come amid recent efforts over the last few days by China to dampen those iron ore and steel prices. Events overnight, they weren't really market moving, but markets were watching the US PPI inflation result. Again, that one did surprise estimates. We got an April bounce of 0.6% compared to expectations of 0.3%. Taking the annual pace to 6.2%. While these were fairly decent positive surprises, we already had the very large surprise from CPI the previous day, and markets, I think, were attuned to something better than expected anyway. We heard from a couple of Fed speakers, Barkin and Waller. Barkin said that the consumer confidence was skyrocketing and the housing sector was booming. Against that, though, she said that there was a need to improve employment and long-run disinflationary forces that are curbing inflationary expectations. So a fairly balanced set of statements there. Waller also quite balanced and sticking mostly to the party's script. He said several more months of data will be needed before policymakers will be able to judge the economy's progress on reaching their goals. Interestingly, though, he did say he wants to see at least the May and June jobs reports before thinking of tapering QE. The mantra from most of the speakers has been that they're not even thinking of tapering. And we heard from the Bank of Canada Governor Macklem. He said that the benchmark rate would not be changed until there was a complete economic recovery. He said that we're about 700,000 jobs below where we really should be. And that comes after the April meeting tapered its bond purchase program and brought forward the date of rate hikes. On the day, what's out that markets might be watching? In New Zealand, very second or third tier data and hardly ever moves the market, but we get manufacturing PMI, which should follow the robust global trend. And in the US, there's a bit of stuff going on there. We'll get the April retail sales. These have been surging on reopenings. And April industrial production also expected to jump about 1%, with manufacturing surveys reporting strong growth. We also get the University of Michigan Consumer Sentiment Survey, still below pre-COVID levels, but it's starting to accelerate. And we get one Fed speaker, the lone hawk, Kaplan. Well, that's it from me today. Thank you for listening. I'll be back again same time on Monday morning.